Hello, again, welcome to Payroll Accounting 106. Hopefully by now you have already watched the opening lecture video, the welcome document. Kind of gives a good overview of how the class is going to be structured, as well as some of your instructor individual highlights added in for due dates, things of that nature. But this is the actual first required lecture. The only time we're going to have a required lecture is in this week, week 1, and we're going to have it in 3 sections. This first section is going to be a review of Accounting 101. Some of you have had Accounting 101 in a prior semester, so this will be a good review for you. Some who have never had an Accounting 101 or are currently in it as well, probably in their first week right now. This is going to be some new stuff. It's going to be stuff that you're going to continue to learn in your Accounting 101, but we're going to do a quick dive into what journal entries are, T accounts, as well as putting everything together in a final summary of a trial balance. So you can get a quick view of what you owe in taxes or how much you have paid in payroll taxes. So let's jump right in. What we're going to look at here in this first video of the 3, we're going to look at the payroll taxes, who pays what, because as you'll find out, and a lot of you may have never known this, not only is the employer taking taxes out of your check and paying them off to the IRS, they are also taking taxes out of their own pocket and having to pay those to the IRS as well. So that probably is a new fact for many of you who have never seen payroll before, that the employer actually has to pay money out of their own pocket for taxes on your behalf. Not only do they pay your taxes because they take it out of your paycheck and then pay it. That's kind of like sales tax. It's not really their money. They're taking it out of your check and then passing it on, but they're also paying their own. We're going to look at how to journalize that and put those into the T accounts or the general ledger. And then we're going to make a trial balance. And then finally, we're going to look at the payroll register. So who pays the payroll taxes? All right, there's 5 primary ones that an employee will pay. I'm usually going to cover these in the same order, and I'm going to have them on our payroll template in the same order, just so we get used to the order. It helps us to memorize them as we go along. The employee, and sometimes I'll put EE. If you ever see that thrown in into any notes, just know that that's to help differentiate employee versus employer, because at first glance they could seem very similar. You could easily mistake one or the other. So sometimes I'll put it as big EE or big ER. That's just what that means. Social Security, the rate that you're taxed at as the employee is 6.2%. That doesn't change from year to year. What does change from year to year is the amount that you're at, that when you hit a cap. And when you hit this cap, this is your wage. This is the wage base. This is not how much you've paid into Social Security. This is how much money you've earned towards Social Security as taxable income. This number changes on a year-to-year basis. For this class, as it's set up right now, even if you're, this is for the fall of 2020 going into the 2021 semesters, we're going to still use this same number, even though in 2021 it will go up. It's not been set in stone yet as of this recording date in late October of 2020, what that 2021 number will actually be. It depends on the amount of inflation. And so at some point here in the next couple of weeks or a month, administration will go in and set that amount. It's based on what's called COLA, the cost of living assistance, or cost of living adjustment. And they put a whole bunch of costs into this basket, and then they compare it to last year's basket of costs, the same stuff, and they see if there's a rise or a decrease. And most of the time it's rising prices. And then that's how they base on how much money you get in your Social Security, or how much, for example, this cap would be set at. So this is based on your amount of taxable wages for the current year. Most of us will never hit this number, or will never hit the Social Security cap. But if you're in an accounting firm, there's a good chance that you'll have a client or two who does. If they're a doctor or a dentist, perhaps a high-level CPA or a lawyer will hit this. Some other high-level jobs, the CEO, high-up VPs will hit this amount. And what that means is they're no longer taxed on Social Security on any wages on above that. So it's a cutoff. The next tax is Medicare. You'll need to memorize this amount as well, 1.45%, because these numbers don't change. These percentages stay the same year after year for several years, 15 or 20 years, maybe more, who knows? It's just whenever if they ever need to go in and tinker with these amounts, there'll be a pretty big deal about it. These amounts, these are just due to inflation. They are scheduled to increase every year. The Medicare has no cap. Actually, what happens with Medicare is there was a new, in the Obamacare Act, when it was passed back in about 2015, there was an actual increase in Medicare. We're not going to get into it in this class, but suffice to say, once you hit a certain threshold, which is pretty high, if you're single, it's somewhere around 200,000. If you're married filing joint, it's about 250,000. Don't quote me on those. It's just that's just my rough estimate. Once you hit those higher level caps, you actually have to pay a premium, a higher percentage on any dollars above those high dollar amounts that you've earned. But for most of us and most of the clients that we ever do, it will always be 1.45%. That's the number I want you to remember. Federal withholdings. These are taxes. These are your federal income taxes that you have withheld. It's based on your family size. It's based on if you have a spouse or not, and if that spouse works. It's based on if you have kids at home and what age they are. We're going to go through all of that when we get into Module 4 about how to calculate the federal withholdings. For now, up until we get to Module 4, I will simply have to give you the amount of the federal withholdings and know that that is the amount taken out of the employee's check. State and county. For Indiana, we have a state and county tax, and that's how I'm going to base this course, is based on the Indiana rules. For some states, they may not have one or either of these. For example, a state like Florida does not have a state withholdings. They don't tax you on your income at the state level. They get their money in other ways. And we're actually going to have a discussion board on that when we get to Module 5. We're going to see more in that, how other states make up for this lost amount that they're not taxing. But for Indiana, they tax you approximately 3.23%. That's the actual amount. Now, the amount that's withheld from your check could be a little higher or a little lower, depending on your number of exemptions. If you have kids at home, if you have different things, but it's going to be pretty close to this. This is actually what you get taxed on your Indiana form when you file it every year with your taxes. When you file your 1040 for the IRS federal, you also file an IT 40. This is the amount that they use, 3.23%. So I want you to have this number again memorized. The county withholdings, they do tax you that in Indiana. It's based on where you actually live. And so it's different per county. Every county is a little different. We'll look again into that when we get into Module 5. Employees can also have other items withheld from their paychecks, and these are more elective. These are going to be set in stone. You have to have these guys taken out within reason. But the other ones here are more elective, except if you have a court order for like child support that you haven't paid, then those are going to be mandatory. But items that are taken out of your check to go into retirement account, to go into pay for medical premiums, those are other costs that can come out of your paycheck. Now, the employer, so that would all be in a first journal entry, and we'll talk more about the journal entries in a minute, but those would all be taken out of your paycheck. After all of those are subtracted, you get your final check for the net amount. The net, there's a difference between gross. Gross is what you actually make. If you make $10 an hour and you work for 10 hours, that's $100. That would be your gross. The net would then be the 100 minus all of the taxes taken out. And let's say you had $20 in taxes taken out. Then you would have actually netted $80. Now the employer, they're going to have to calculate their own taxes on the side and pay those in addition to what they take out of your paycheck. The employer, whatever they calculate for you for Social Security and Medicare, they're going to pay the exact same amount. So if they have $10 taken out of your paycheck for Social Security, they're going to have to chip in another $10 for Social Security. Medicare, the same thing. They're going to chip in the exact same amount. Now, two taxes that we're going to get into, but we're not going to get into these until Module 6, are the Feuda and Suda taxes. These are unemployment. These are taxes that the employer has to pay in to the state and federal. And then what that money is sitting there in case you as an employee get laid off through no fault of your own. Very similar to what has taken place in the past 6 months with the coronavirus. And as you're watching this, even beyond those 6 months, people are being laid off. Where that money comes from that they get paid is out of these taxes that were paid in earlier through the employer. Other things that employer will also have to chip in that they don't necessarily have to, but a lot of them do to recruit employees and keep them, is when they put money into your 401k retirement, they maybe match it, what you pay in. They pay in usually a pretty big chunk of the medical premiums for your medical insurance. And then they may throw in some other costs as well that they pay on your behalf. When we talk about payroll, it's one thing to calculate the amount of how much to actually pay the employee. And we're going to do that in our second video. We're going to create a payroll register in Excel, a template. And then you're going to be able to use that template from here on out throughout the rest of the class. We're going to use that every single week. But we also need to be able to journalize this and put it into T accounts and finally a trial balance. So we can know how much taxes have been collected. So when it comes time to pay them, we have an easy way to say, okay, we owe the Social Security Administration or through the FICA taxes, we owe $66, if that would be the case. All right, so going back to Accounting 101, if you've had Accounting 101, this is something you should definitely recognize, the accounting equation. The accounting equation in long form here is the assets equals liabilities. So assets are on this side of the equation, the left side. So everything on this side has to equal whatever the assets are. Liabilities and owner's equity, revenue and expenses. The main areas we're going to look at in this class is we're going to look at liabilities, the amount of taxes that were withheld from your check that need to be paid. And we're going to look at the amount of taxes that have accrued and the amount of wages that have accrued over here. Those are going to be the two main areas we're going to look at out of this accounting equation for this class. You'll hear me talk about debit and credits quite a bit, so we have to know these terms. The debit is the left side of the T account, whereas the credit is the right side of the T account. Debit does not mean plus or minus. Now, so you might say, oh, well, debit, it's on the left side, so it's a plus. That's true. But as a liability, the debit is a negative. It's a minus. And the owner's equity is a minus, and the revenue is a minus. But the expenses are back again, plus. The easiest way to remember it is the two ends, assets and the expenses, are both plus minus. Everything in the middle is minus plus. Easiest way to remember those when we're looking at which side of the account is a plus or a minus. I've put on here, and this is where I'll, just a minute or two, I'm going to pull up our T account sheet that I have provided for you. But this is going to kind of look like some of the T accounts we're going to use. We're going to have Social Security payable. It's going to look just like our liability account. So all the liabilities are going to look like minus plus. So I'm going to have a T account specifically for Social Security taxes. I'm going to need to know how much do I owe to the IRS. I'm going to need to have the same thing for Medicare, same for federal, same for state, same for county. All of the taxes are going to have some kind of a payable. And then over here, we're going to show the amount of wages that have been earned, gross, as well as the amount of payroll tax that the employer had to pay in addition to the normal wages and taxes that they took out of the employee's check. So at this point, I'm going to expand my screen, and we're going to now look and see the Excel document that I have for you. You'll want to have this up as we go through, because when we start looking at an example, we're going to use this. With this Excel document, I have just some typical accounts that you're going to maybe find in a payroll class, and even some of them that maybe not. Like, we're not going to really use sales revenue for this class. because we're talking about payroll, but I wanted to give you an example of something in the revenue so you could see how it looks. The only real asset we're going to use is cash, just to be able to pay the employees or pay our taxes that are due. And then you're going to see we have a long list of liabilities, the 200 level accounts, down through our state, county, and then Feuda and Suda. And then I even added this little guy down here just to show you the other non-taxes will also go here. If the employer has to take money out of your check or they pay in to your medical insurance, they're going to have to keep a running total of what they owe. So then when it's time to pay, say it's through Anthem Blue Cross, when it's time to pay Anthem the bill, they'll know how much they owe. And then we're going to keep track of our expenses over here, primarily looking at our wage expense and our payroll tax expense. And then I added these couple in too, to show that we're also going to have medical premiums and 401k type expenses like retirement expense. These are the amounts that the employer chips in addition to what you put in. This is their own expense coming out of their pocket. Okay, when we're doing a journal entry, debits, whatever is on the left side of the T account, always goes first. And credits are always going to go last. So hopefully you've learned that in Accounting 101 or are currently getting ready to learn that. But just keep that in mind. Debits always go first. Credits always go second. These T accounts, these are our running total of our balances. So we always have an idea of what we owe and when. When we have a running balance, one of the things that, and when you can go ahead and do this right now along with me, and then you can use this same ledger, copy and paste it into like a different example, or so it'll always have these totals. But what I would recommend is putting in a balance. So you'll always have an update of what each account is. So you'll have a balance. You'll put sum, and then you'll add up the whole debit column because debit's on the plus side. And then we're going to subtract the minus side over here. And I'm going to put sum and then the parentheses. Add up everything in the credit side, close the parentheses. And you're going to, if you have it set up as I do, when you open up this document, the whole document is set up as accounting format. So that's why instead of having a 0 down here, it's going to have a dash. So now if I would put in numbers, say like 3,200, and then if I said, well, I paid 800 out of that to pay something, it's going to keep a running total of what my cash is. No matter if I put in another 600 here, it's going to show, yep, I lost more cash. But then if I put in 6,000 as money coming in, it's going to show my cash going up. So that's the reason I like to put in this formula. It's always keeping it up to date. I never have to worry about adding and subtracting it. And I would do the same then for all of the other accounts that I have set up. So I'm going to have a balance over here for Social Security taxes payable. And I'm going to hit equals, but the plus is on the credit side now. If you remember back up here, the plus, you always got to start where the plus is. So we're going to do equals and then the sum of whatever's in this plus side, and then subtract out what I've paid or what's on the minus side over here. And I just need to put in the word sum and then close it out. Now this one has a 0 here. That's because for whatever reason, this cell didn't get calculated in the cell format. So if I go in and highlight the entire sheet, and if I right click, it's going to bring up this option and I can go into format cells, or I can just go up here and this one says general. But if I click on this and go to accounting, now it's going to have this. It's going to have a dollar sign. Maybe I don't want the dollar sign. So I come over here and I click, well, let's actually, it's easier, I think, to go into format cells and then click none. And then if I don't want it to have any decimal places, I will for this one. I do want it to have decimal places, but I could change it here as well. So now it takes away that dollar sign. What I want you to do is go ahead and do the balances for the rest of these and then Same for the capital, same for the sales and the wages. I'm going to pause the video. I'm going to go ahead and do the same thing. And then hopefully when I start back up, you'll have them all done, and we're going to do the final step here on the T accounts to get them ready to do a journal entry. So go ahead. I'm going to go ahead and pause at this time. And by the time you're done, unpause and we'll be ready to go. All right, so now hopefully you have all of the balances listed here. So I'll just give you an example of the expenses. We're not going to have I have no over here. There's only going to be a very few situations, and that's really only in Accounting 101, where we're going to have something over here in the no category. So when you're doing the balances, you really only need to add up the plus side, because we're not going to have a negative expense unless there was a mistake. That's really the only time that you would have something as a credit, is if you had a mistake and you had to undo it. But for other than that, what I want to do next is, this is an equation. So I always want it to balance. So what I want to do over here is I want to get my total assets. And I only have one for our purposes here. We're just going to have cash. We're not going to have all the other ones like accounts receivable and equipment, because that's not going to come into play for our class for payroll. So what I did is I just brought that sum, whatever it was for cash, and that's going to go here. And then whatever this number is, it needs to equal all of these added up, or in this case, subtracted when it's an expense. And we're going to show that number here. So what I want to do for the liabilities is I want to equals, and then I want to go through and total each of the balances. So I'm going to put that one in, and then I'm going to plus, hit the plus button, and then go through and do that for each of the balances that I have just completed. So I think we've got 6 or 7 of them. I didn't do the last one. I just did the taxes for now. And so I could do the last one at some point. But when I go through and add those all up, and you can see there was the 5 of them here. I'm going to do for the owner's equity, just the one. That's all we have, the common stock or capital, depending on your terminology. Our revenue, just have the one. We're not going to hardly even have any revenue in this class, but I wanted to put it in there. And then our expenses. Our expenses, we're going to have the 4 of them. And the payroll tax, the wage expense, payroll tax, the medical premium, and the 401k. Now, the last thing that I want to do is come up here to the right side, the total that I have on the right side, and add up these items. So the total for liabilities plus owner's equity plus the revenues, but minus my expense total, because that's what the equation says to do, minus it. Then whenever we start adding these all together, the assets better equal this number, and that's how we'll know if we've always have things up to date and correct. All right, so let's jump in, and we're going to do the first item, the first little example that I have. First thing when we talk about journal entries is there's going to be always at least 2 journal entries whenever there's a payroll. We're going to have the employee and what they've earned, and then the taxes taken out of their check. Then we're going to have in journal entry number 2, the employer's additional taxes that they have to pay. Now, there could be additional journal entries. If the employer pays into medical premiums, that's going to be its own entry, perhaps. It's going to be a separate one. If they pay into the retirement account, they'll have a separate expense for that. So you could have more than 2, but you'll always have at least 2. All right, so on the for our example number 1, this is March 15th, so not very far into the year. Our previous earnings are $6,700. Now, you have to know that. You have to know what your previous earnings are to see if you hit any of the caps. So when we go back up here and look at the caps, there's only 3 that really are going to come into play. The first one is Social Security. We're nowhere near the cap. We've only made $6,700. But when we come down here to Feuda and Suda, these Feuda and Suda that we're going to talk about a lot more in week 6, but I do want to introduce these at this point. The Feuda tax is really low. It's only 0.6%. So as a decimal, 0.006. And the employer only has to pay this tax until you have hit $7,000 in wages. Now we're at $6,700. We're pretty close. So this paycheck, we're probably going to go over that $7,000 cap. And I'm going to show you at that point when that happens, what you have to do. The Suda, well, I'm always going to have to give that percentage to you because it varies depending on the company. The Suda cap for Indiana is slightly higher than the federal, and it's capped at $9,500 of your taxable wages. So we're at $6,700. We're probably not going to hit that cap yet. We will probably in the next pay or two, but probably not this pay. I mean, it depends on how much we made, but I'm going to guess without even looking that we haven't made $2,800 this paycheck. Because from $6,700 up to $9,500, that's $2,800 that I would have to earn to hit that. All right, so we've only earned 1,000, so nowhere near the 2,800. The Suda rate, I have to give to you. I have to give you the federal rate for now up until we get to week 4. Normal Indiana rate, remember that's 3.23%. And then the county rate I always have to give to you. County rate we're going to say is 2% based on the county that this employee lives. We're also going to assume, so we have something to start us out with, that we have cash and capital starting balances of $5,000. So that's where I'll want to go into my T accounts. So if you have your general ledger, what I would do is I would open up this, bring this back up, maybe have this as your template, the one you're always going to come back to, and then perhaps make a second tab or in a different worksheet. And that's what I did here. So we have the exact same thing. I have my totals. I have my totals up here. And then I'm going to simply put in my opening balances, cash and capital, 5,000 each. I got to be on the same. I got to be the same. I can't just have 5,000 over here because then my equation won't balance. But with putting them in both spots, I have my assets of 5,000 and my total right side is also 5,000. Now we're ready to go ahead and do this journal entry. Now the journal entry is always going to start out the same. We're always going to start out with our wage expense. That's how much the employee actually earned gross before I take any taxes out. So I'm going to come over here and for journal entry number 1, I'm going to have $1,000. We'll just put journal entry number 1 as my date since I don't know what the date is. Journal entry number 1 was 1,000. Now what we're going to do is start taking money out of the paycheck because we're not going to pay them 1,000. We need to take out the 5 items from up here. We need to take out, we need to take out these 5 things. So let's do Social Security and Medicare first. Social Security is 6.2%. We're nowhere near the cap. If I add in 1,000 to the 6,700, that puts me at 7,700, nowhere near 137.7. So I'm just going to tax the full 1,000 on the 6.2%. If you do that, we get $62. And Medicare has no cap. All of it's going to be taxed at 1.45%. And so that's money that I'm going to have to pay to the Medicare. And usually you pay Social Security and Medicare together, but we're going to go ahead and keep them separate for now. 62 and 14.50. So I'm going to come into my journal, and for journal entry number 1, I'm going to have $62 that needs to be paid for Social Security. And I'm going to have for journal entry number 1, $14.50 that's going to be paid to Medicare. Now, if I go down to my list, I've done number 1 and number 2 out of 5. Number 3, 4, and 5 are federal, state, and county. So my federal withholdings, it tells me we're going to assume 5% of our wages, so 1,000. So 5% of 1,000 is 50. So my federal income tax payable, or in this case, I just abbreviated it federal withholdings payable, $50. I'm going to put that into my T accounts. The state, remember that's 3.23%. And then the county was 2%. These are all liability accounts, all amounts that I need to take out of the employee check and get ready to pay to the employer, or get ready to pay to the different IRS categories here of where they need to go. So let's put these into our T accounts as well. 50 for federal. Oh, my balance isn't coming through for whatever reason. So let's update this. As I do this, mine didn't carry forward. So I'm going to pause for just a minute and update my sheet. And hopefully you won't have to if you did it as I told you. I'm going to pause real quick, get things updated, and I'll be right back. Okay, so I got my journal entry number 1 for the $50 for the federal income tax. The state, journal entry number 1, we had 32.3. You can always look back here. We had the state payable of 32.3. And it should always come down and update your balance. County, for journal entry number 1, we had $20. Now we're almost done with this first journal entry. The last thing that we always have to do after all of the taxes are taken out, this person is really simple because they don't have any other withholdings like medical premiums that are had to take out of their check or for retirement or anything else. So the last thing you always got to do then is how much did you pay them? What was left? And then we can call this one of two things. If we're going to pay them that day or in the next day or so, we can go ahead and call it cash if we're going to go ahead and cut the check. Or you can call it wages payable. Wages payable would be adding another liability. And that's just saying that we're going to pay them soon, maybe in the next week or two. And a lot of times that next week or two may fall into the next reporting period. So that's why we have to call it a payable, because we're not actually getting rid of the cash yet. But we're going to make it simple here. We're going to say we just pay them today. And we're going to credit cash for anything that's left. And so how you want to do that is it's not hard to do. Just take 1,000 in your calculator and then start subtracting all of these guys. And whatever's left will be the amount that goes here. So I'm going to come over to my cash T account and put in $821 and the amount of cents. Let's see what it was, 20 cents. Now, one of these I didn't get added in. Yep, I missed one. There's 6 of them. The only reason I knew I didn't add it in is because when I finished it out, my 2 boxes didn't total. That was a big clue, and that told me, hey, there's a mistake somewhere. And then I can easily go in and check. And sure enough, I missed one of the totals. So there actually is 6, when before I showed you I had only had 5. So I had skipped over one. Now my totals equal. My total assets equal everything on the right side. So I'm doing good. I've got journal entry number 1 complete. Journal entry number 2. Well, what we're going to do here is we're going to figure out how much in extra taxes does the employer have to pay. So my debit, you can start this out as you see the 118 here, but I don't know that until I'm all done. And so we kind of start out with XX because we're not sure, it's an unknown. How we figure it out then is we go through and we have to calculate how much in taxes does the employer have to pay in addition to the employee. So remember the first two, when we go back up to our items that the employer has to pay, they have to pay Social Security, Medicare, Feuda, and Suda. Social Security and Medicare are whatever the employee paid, the employer has to chip in as well. So that's easy. My first 2 numbers that I need to add into my T accounts and journal are another Social Security and another Medicare. So I'm going to come over and put in those 2 amounts first, 62 and 1450. And maybe I'll call this the employer number 1, just so I know what the difference is, why I have 2 entries. This is the employer's journal entry for example number 1. and the employer had to pay an extra $14.50. So now there's $124 in Social Security and $29 in Medicare. Now, when we get to the Feuda, this is where the hardest part of this whole thing comes in, is when you hit the cap. There are 2 steps that you need to do whenever you hit a cap or when you're getting close to a cap. Step 1 is you need to first determine, did you go over the cap with your current wage? If yes, then you go to step 2. If no, if you didn't go over the cap, then you just use your current wage, $1,000. So step 1 for Feuda says, okay, we had $6,700. We added $1,000 in current wages. That brings us to $7,700. That's over the Feuda cap. Feuda cap's at 7. This is $7,700. If we're over the cap, then we got to come to step 2. Step 2 says, okay, well, how much do you have left until you hit the cap? So how do we do that? We just take our $7,000 cap amount for the Feuda, subtract out where we're at currently before our wages this year, this pay. And that tells us, oh, we only have $300 until we hit that cap and have to stop. So that's what we're going to do here for Feuda. We're going to take the 300 that we have left and multiply it by 0.006. Now for Suda, if we do step 1, 6,700 plus 1,000 is still the same answer, 7,700, but the Suda cap is 9,500. This isn't over 9,500. So I don't need to go to step 2. I'm just going to use the full 1,000 still. Just like how I did in the Social Security. I wasn't anywhere near the cap, so I used the full 1,000. And I use at times what I gave us in the problem. The problem said it was 4% for this company, the Suda rate. Now, once I calculate these 4 items, I then add them together, and that's where this guy comes from. These are the extra taxes that the employer has to pay in addition to what the employee had to pay. These are coming right out of the employer's pocket. So let's put in these 3 extra numbers now. We got the Feuda. The Feuda was $1.80 for the employer entry number 1. The Suda, the Suda was $40, I believe. Yeah, $40. And then the last item was over here in the expenses. When we added everything together, it was $118.30. Now, my final check is, did I do my 2 sides equal? And somewhere I must have missed out a few pennies, and let's see what happened here. Here I have, must have not added in my Feuda. Let's check it out. I may have missed another one yet. Yep, I sure did. Man, I skipped 2 of them. I don't know, I must have hit a button and it scrolled me down. So I've missed this Feuda. So there's actually 7. Boy, I'm feeling a little bad about my initial one where I only had 5. Goodness. All right, so now looking at this, we are the same. So now I've probably got everything. I don't want to say that for sure. I thought I had everything before. Things happen. Sometimes on this keyboard, I hit the page down button instead of the down button arrow. So it scoots me down further than I thought. And I think that's what happened here. All right, now let's, all right, so what we're going to do here, what we're going to do in example 1-A is it says, okay, future payments for the payroll taxes to the IRS, 2 weeks to 1 month later. So we're going to look at how we do this later on, how we determine when it's paid and all that. But for right now, we're going to assume that it's now time to go ahead and pay these 3 taxes. We're going to pay the federal withholdings, the Social Security, and the Medicare taxes. The due dates come, we have to write a check and send out the money for those 3 taxes. Okay, so what we need to do is we need to look at our T accounts to see, okay, what do we owe? So I look at the Social Security, I owe $124. So I need to write a check. No, I'm not, my check needs to include 124. So the first thing that I'm going to do is I'm going to debit the 124 that shows I no longer owe $124. When I pay it off, my liability is going to go to zero, and that's what I want to see here, a zero. So I'm going to debit 124, and we'll call this, maybe I just call this payment, just so we can keep track of what we're doing here. Payment is 124. I need to pay my Medicare, so I'm going to have another payment, and it's going to be of whatever the total is here, so 29. I also need to make one final payment because it also says to pay your federal income tax. And I'm going to pay 50. So all three of those were debited, and that's what I'm going to do in my journal entry. Debit, debit, debit. All of the T accounts are now at zero that I just paid. My credit is the actual amount that I have to write the check for. I wrote the check, when you add all these up, for $203. So I'm going to come over to my cash and show that I have a payment of $203. When I look at my totals, they still balance. That's good. And I would have completed my first journal entry. Now, when you're all done with after your entire journal entry, maybe your payment, and let's say it's now the end of the month, we're ready to set up our trial balance. When we have a trial balance, we're always going to have our proper title at the top. You're always going to have the company name. And then you're going to have what it is you're preparing. So in this case, the trial balance. And then you're going to have the date. And I don't know what the date is. Oh, yeah, I do. It was the end of, let's say it's the end of March. Or in this case, let's say it's March 15th. Because that was when notice that our previous date was March, whatever. We'll say the end of March. March 31st. And whatever the year is. The trial balance, all you're going to do is you're going to have all of your accounts, and they're just going to keep them in the same order as the equation goes. So our first account is going to be cash. And then over here, we're going to have a debit column and a credit column. And our cash will always have a debit balance. Oops. Our cash will always have a debit balance. And we want to simply put what it is at that point in time, $39.75. Then I come over to my next account. I don't have any more assets for this problem, and I go in and I put in Social Security tax payable. Now I'm going to want to make this column bigger so I can fit it all in. So I just double clicked up here on the A. Social Security, it's always going to have a credit balance or nothing. In this case, it's nothing because I just made a payment. For our purposes right now, I'm going to go ahead and leave it in as a zero. But when you're doing it for real, you wouldn't have to put in a zeroed account. That is optional. Most of the time you don't. But I'm going to go ahead and leave it in as is. My next one, I have my Medicare. And then I'm going to put in the total for that one. That one also happens to be zero. Now, what I want you to do is go ahead and pause the video here in just a second and put in the rest of the liabilities and their balances. Do the owner's equity, revenue, and the two expenses. And then we'll start the video back up at that point to finish out the trial balance. So go ahead and pause now so you can be up to date with me as I resume the recording. Okay, I now have all the cells referenced, and I would highly recommend that you always reference cells. Don't just type them in again. Reference back to where they came from. Therefore, if there's ever a mistake, me or your boss can always go back and see where you got that number from. And so it's just not a, where did you get it? Or maybe you just mistyped it, because this one would be very easy to put in as 2330 maybe. You just got the numbers mixed up. Don't just type them in if you have them somewhere else. always reference. So on this case, I just went equals to my state taxes payable here and then hit enter. Always reference to that another sheet or somewhere else on the same sheet. What the other thing I like to do is when I'm in between the parent accounts, like assets and liabilities, I like to put a space in. I like to have white space. You don't need to do that. That's just a personal preference that I think makes it a little easier to read. So if you wanted to go ahead and insert a few lines here, great. I think that's a good thing. The final thing that you always do on a trial balance is you come down after your final expense and then you put in your totals. And your totals better be the same on both sides. Your total debits, when you add up just your debits, you don't subtract anything, just add up your debits. So sum, and then parentheses, include all of the items up to cash. And then come over and do the same thing for the credit side. These are just the debits and credit totals. It's not gonna necessarily match your total assets or your total liabilities or anything like that. So you see these two numbers and you're like, oh, that doesn't match my assets. No, it doesn't, because it also includes some expenses. But these two do match. And you can see that I don't have it all set up in the same format. So I'm going to do that because I like things to be the same. So I'm going to go to format. I'm going to go to accounting, and 2 decimal places is good. And now they both look the same. The whole thing about a trial balance, your debits and credits need to be the same, along with when you're doing your T accounts, your equation needs to be the same. Trial balance, your debits and credits need to be the same. All right, that takes care of our first entry. Now, what I want you to do is finish this second one. Pause the video in just a second. I want you to go in and start out with these balances. Here are your opening balances. So you're going to take your general ledger. You're going to copy it into a new tab. And on this one, I went ahead and did my journal entries in the same Excel, so I could copy and I could reference back and forth. And I already have the answer, so you'll be able to see that in just a second. So you're going to copy this into a new tab. So you have everything already set and ready to go. Then when you start putting in your amounts, it'll start totaling it for you. So that's the good thing. You won't have to do that ever again. And then I give you the opening information that you need. And let's see how you do. This is your key thing. Remember, you have 6,100 in previous earnings, so that's going to come into play on one of the caps. And I'm going to pause the video at this point, and I want you to finish this. And this is the only way you're going to know if you really understand this stuff, is if you do it and then compare to the answers that we're going to go through here in just a few seconds. So with that, go ahead and pause. Okay, hopefully you paused and you went through that. If not, pause it right now before we go through the answers, because that's going to help you know if you have kind of begin to understand the journal entries of payroll. So the first thing here, we got 6,100 in previous earnings. We now have 1,500. All right, so we get in our opening balances. So you need to have those in. So you'll have the 3,000 in cash, your beginning Social Security payable, your beginning capital stock. So you have all of those in. Our first journal entry. Your first journal entry should have looked like this. Our debit to wage expense to show how much the employee earned. And then you can see the calculations that I did when I click on the individual cells. The 93. And then we've got the Medicare at 1.45. I told you what the federal income tax was. It was at 6% of the total wages. State is 3.23. And then I told you the county, we're using 1.5% for this example. To get the cash, all I did is take the 1,500 and then subtract out all of these amounts to get my cash balance. I then go in and put all of these guys into my T accounts. So like the wages expense, I have the 1,500. Anything that I have in orange, that's how I differentiated it on this one. Anything in orange is from the employee journal entry. If you need to pause, do so at any point, and you should have nothing down below here yet. I'll total up my equation in just a minute. That's the only thing that didn't get carried over because I just forgot to do it. But we'll total that up. Okay, so now let's look at journal entry number 2. Journal entry number 2. The easy part is just knowing that Social Security and Medicare are the same as up here. We just add in the same amount. When we get to Feuda, we're going to come close to the cap, if not go over it. So we always check. Step 1, the previous wage plus the current wage. It does take us over the cap. I just want you to note that don't use this number anymore. Don't use the 7,600. That's just to tell us if we're over the cap, yes or no. Then we just move to step 2. We do not use that number. We take our actual cap and then subtract out the previous wages. So 7,000 minus 6,100, 7,000 cap minus what we've already made says, okay, there's only 900 left to tax. I don't want to tax 1,500 because that takes us way over the cap. So what's left? We take the 900 times 0.006. And then Suda, when we do this, the 7,600 is not over the Suda cap of 9,500. So all 1,500. I said D3 times 2.5, 1,500 times 2.5. And then this is simply adding up all 4 taxes. Then I want to go in and put these guys as well as this debit here into my T accounts. So go ahead and do that. I'm going to update my totals. I'm going to update the accounting equation at the top. And then finally, what I'm going to do is update my trial balance. So, and I want you to do the same. See if your trial balance, see what you get for your trial balance, just like mine. All right, when we get the first payroll, the journal entry number 1, and then the employer's journal entry number 2, these are our balances at this point, up to this point. So I had $1,775.70 on the assets, and then the total over here is the same when I add up the right side of the equation. Now the last part of this one says, all right, we're now ready to do the, we're going to pay off some of our taxes. And again, we're going to pay the same ones. We're going to pay the federal income tax, whatever's in there, Social Security and the Medicare. Oh, before we do that, I wanted to show you my trial balance. Trial balance number 2, this is before payment. I have all of my accounts, so I have all of my liabilities currently have balances. You'll see that they won't in a little bit. We're going to update that. And this is what I currently have for my totals. So everything balances, but this will, it'll still balance, but some of the numbers will change when we go in to do my last journal entry. So my last journal entry says it's time for me to pay my Social Security, Medicare, and federal taxes. So I look up, and when I added everything up, it was $256. So now I'm going to pay that. So the amount needs to go to 0 that I owe. So I'm going to debit $256 to Social Security. I'm going to do the same thing. I'm going to put in $73.50 here. It's going to make that go to 0. And then I'm going to put in $150 for federal. That's what I need to owe. That's what I'm going to owe. If I do that, put those into my journal entry. Those are all of the liabilities that are now being taken out because I'm making a payment and I'm writing a big check for the total. So I just summed these 3 up. So I'm going to write a check for $479.50. And I'm going to show that as my cash over here, $459.70, and put that in green. Okay, let's see what I'm missing, if anything. All right, something we're gonna figure out where this mistake is. I see there's got to be a mistake somewhere because my equation isn't balancing. So what did I forget to do? That looks good. That looks fine. Let's check my adding over here. That looks good. And some of you are probably screaming, it's right there in front of you. What am I missing? All right, let's one way to do this, and this happens a lot. Just take your difference. That's one way to go about finding the mistake. $19.80. Where something 1980. Interesting. Well, I've written down. Oh, I bet it's right here. I bet I just did that number wrong. And that's why, yep, I sure did. And that's why I always say to reference cells, and I didn't do what I always say. If I would have just referenced it correctly, I wouldn't have had a offset. So I put it in incorrect. So if I go back here and say what it should have been, 479 instead of 459, now everything does balance. And my T account, or my trial balance, now shows these guys at 0. My debits still equal my credits. My cash went down a little bit. So my trial balance is still where it needs to be. Okay, that is it for journal entries. You're now ready to look at part 2, where we begin to make the actual payroll register. So we can figure out and get these numbers for multiple employees added up all at once instead of just one employee at a time. That's what's coming up. And I'll see you over there.